All right, joining us now is Scott Martin, Kingsview Asset Management kind of guy. He's a stock market guy. You know, this tax question, whether we get it or not, whether it's disappointing or not, at the moment it seems to have stalled the market, doesn't it? I mean, at 23,300, we're stalled because of taxes, right?
It does, Mr. Varney, which is something to be noted of, right? Because this is a market, Stuart, that has rallied on great economic fundamentals. And I think the hope and promise of the Trump administration to follow through on, goodness, just something in the agenda. So the fact that this keeps dragging out and the fact that we have the Senate really cutting up this tax bill is something that, as you mentioned, is really detrimental to stocks going forward. And a reason, and a good one, that the stock market is pausing here. Okay, talk to me about GE. As you know, and all our viewers know, they've got a turnaround plan. They've cut the dividend in half. They've issued a pretty nasty stock, profit forecast for the future. And right now, that stock is trading at $19.50 a share. Would you buy it? I wouldn't. Not right here, Stuart, but I almost feel like a shrink talking to the stock here and saying, this is hitting bottom. This is a safe place. This is where the healing begins, GE. So soon as a trade, Stuart, I think it would be an interesting take for maybe 6, 9, 12 months. Longer term, there's other stuff I would rather own. But we've talked about this the last few weeks, my friend, when the sentiment totally washes out on a stock like this, and the baby and the bathtub and the bathwater are all thrown out, as they are today with this major reversal down 4%, as you mentioned, that's a time to really start watching the stock and maybe taking an entry point. I think a lot of people are. I also want to talk to you about Walmart. They're raising prices online so that you pay more. If you buy something online at Walmart, you'll pay more than if you bought the same item in the store. Does that sound like a good strategy to you? Because the stock has hit an all-time high today, Scott. It has, and Walmart's been really interesting. You know, Walmart is kind of the situation where maybe the world is big enough for Amazon and Walmart. As far as the strategy goes, good isn't a word I would probably use here. I would say it's interesting. I mean, some of the online prices and the differences between the store and online are pretty striking. I mean, a hamburger helper, for example, is $1 more online. But what's interesting, too, is when you think about online shopping, you think about the experience, Stuart, you think about the quality of the goods, the speed at which they're delivered. If I were Amazon, I'd find out what that expensive stuff was online through Walmart and just undercut them and see if you can steal their customers. Yeah, it's obvious, isn't it? I mean, that's one of those obvious things that a capitalist company would do. All right, Scott, thanks for joining us. As always, sir, we'll see you again real soon.